Hey everyone, Rob B here with Rob D. And you, of course, are listening to the Property Podcast. Now, the UK property prices have been mental this year. They've been accelerating no end. But we're going to have a look around the world this week because you actually learn a lot by looking at what's happening globally. And does that help us make more sense of what's happening in the UK? And in this episode, we're going to reveal the country that's property market has grown 32%, which is triple the number of the UK. But if you think it's all upside across the globe, you'd be wrong, because there's a country that's seen its property market plummet this year by 17%. All of that coming up in this week's episode.
Welcome to the Property Podcast, where every Thursday morning property investors come to be informed and inspired. Well, I've not got to do much travelling over the last couple of years, so we're going to travel on the podcast instead and take you on a global property tour. And like Rob said, there are some really important insights that, even if you have no intention of investing outside the UK, will make you a better informed investor in your home market. And make sure you stick around to the end for Hub Extra, because if you are going to be doing any transactions abroad, we've got a tool that makes it a whole lot easier for you.
Okay, it's time for our news story of the week. And as it's a bit of an international episode, we've got a bit of an international news story for you. The headline reads, Spain takes on private equity landlords as cost of housing soars. Rob, what have we got here?
Well, this is a theme that's been bubbling for a while, and I think we're going to see a lot more of this. We've actually got a couple of news stories on this theme. And this particular story is that the Spanish government is contemplating rent controls and restrictions on institutional property ownership. And this seems particularly related to institutions like Blackstone, who own nearly 30,000 homes in Spain. Basically, they seem to have seen an opportunity there to snap up some homes when they were cheap in exactly the same way as they did in the US. And that's turned out to be a pretty good bet. But the government is not happy about it. They've seen house prices rising, they've seen rents rising, and they're now looking to cap rents. And I can't tell from this story whether they're specifically capping rents charged by institutional owners or if it's a general thing, but it's certainly something that they're looking at. There's another story as well, which is interesting, which is that in the Netherlands, Dutch cities want to ban property investors outright. So in, I think, all the major Dutch cities, there is a bill going through that from the start of next year intends to basically ban property investment for homes beneath a certain value. So homes can only be bought to be lived in by the buyer. And again, this is because they're seeing prices rise. It's pricing out people who want to live there, and they see this as a means of addressing that. And taken together, I think these are really interesting stories. And I do think it's something we're going to see more of because, as I'm sure we'll talk about in a moment, this trend of rising house prices is something that we're seeing everywhere. We'll talk again, I'm sure, about the causes of it. And those causes can't really be addressed by anything in law in the way that these governments are trying to do, but you can see why they're trying to do it. So this is going to be a very interesting area to keep an eye on as we go into next year. 2021 has been a year that has defied predictions in the UK. I don't think anyone, us included, foresaw the full extent of what was going to happen in the UK property market. But is the UK some kind of weird outlier? Is there something special about our property market or our psychology that has made property prices go up as much as they have at a time when so many people expected them to come down? Well, that's what we're going to look at this week in this episode about property around the world. Because when you put the UK in a global context and you look at what's been happening elsewhere, it gives you a far better understanding of what the drivers behind the property market are and are not. And that means that you're going to be able to make far better decisions whether you decide to invest in the UK or whether one of the other countries that we're going to talk about piques your interest. So Rob, I'm pretty sure that everyone will be aware of this, but it might be worth starting briefly by talking about what's happened in the UK this year, and then we can broaden out and look at what's happened everywhere else.
Yes, it's been a active year for the UK property market, a busy year. And that's resulted in, according to the data that were taken from Nationwide here, that the UK property market so far is up just over 10% for the year, which is a big number. To put it into context, the average for the last 5 years in total is 18%. So 10 of that 18% has been done in the last 12 months. So the UK property market has been sleepy and it's not been doing a lot at all, but it's really gone great guns this year. And the media has started to pick up on that as well. Of course, if you listen to the property podcast, you're going to be more sensitive to that news and you'll be fully aware that the market's rocketing. But the general public have taken a bit of notice as well. I wouldn't say there's full on mania around property in the UK right now, but certainly it's become part of people's general conversation again because property prices are on the up.
I think what you said just then, Rob, was really interesting because you said not full on mania, and that's completely right. When you hear about double-digit growth, you normally think, oh, well, that must be like something that's happening right at the end of the property cycle when everyone's just going crazy. It's going up and up and up. Everyone's just willing to pay more and more and more. Lending is super loose and everyone is just wanting to buy anything at any price. But I don't think that's the case. It doesn't feel like that at the moment. Sure, everyone's very aware that property prices are going up. And if you're looking to trade up or you're needing to relocate for some reason, then that's probably quite a painful thing to be happening. But I'm not detecting any of that mania at all. And that really makes this double-digit growth even harder to understand. We might be able to build up a better picture about what's going on when we look at what's happening in the rest of the world. So is this just a UK thing or is it happening elsewhere? Well, if you go onto globalpropertyguide.com, you can look at what's happened over the last year, 5 years and 10 years in many, many different countries around the world. So let's go through and look at just countries that have done more than the UK over the last year, because the UK is not out there on its own. So here's just a partial list of countries that have grown by more than the UK over the last 12 months. So Norway has grown by just under 10.9%, Austria just under 11%, Russia 11%, Japan 11.1%, Germany 14.3%, Netherlands 14.5%, Canada just under 16%, Pakistan 16%, Sweden 17.2%, and the US 17.4%. So Rob, clearly that's not every country in the world, but in that list you've got the likes of Japan, Netherlands, Canada, US, Russia, and in many cases the growth has far outstripped what's happened in the UK. So it's really building up the picture that whatever is driving property prices in the UK is not a specific local factor.
No, it's not. There's 68 countries represented in this table, and the UK is 20th. So there's a lot more that Rob's not mentioned there as well. Rob's kind of focused on some of the major countries, but there's a lot of countries represented in this list that may not spring to mind immediately, and you wouldn't expect to do as strong as London. So 20th out of 68 countries, you're a bit above average, but you're not absolutely smashing it. But I'll tell you where is smashing it. I'll give you second, first of all. New Zealand is in second place on this list, has grown a phenomenal 28% in the last year. 28%. But you think a number like that would represent the top, but it isn't. Turkey tops the charts at nearly 32%. 32% growth in 1 year. That's mania, Rob. That is crazy. That is a massive, massive number. It's then when you look at the rest of Turkey, you want to understand these numbers, right? It's then when you look at the rest of Turkey, you start to paint the picture, and their stock market this year to date is up 45%. And inflation is at 18%, which goes a long way to explaining those massive numbers. Although 18% versus 32%, still a big, big difference between the two. So rampant inflation has clearly had an impact on the Turkish property market. But as we've explained before, if you owned a property in Turkey and you had a mortgage on that property, some form of debt on that property, then you'd be in a very, very good position because the inflation has eroded the value of your debt, but your property prices have gone up by nearly a third. So an incredible year in Turkey for property prices, very turbulent. It must have been very stressful trying to operate in that market for all concerned. But what it does do, Rob, is it puts things into perspective of what's happening here in the UK. Yes, it's the first big year that we've had in years, but actually we're nowhere near the top of the charts.
No, and the same pattern holds if you zoom out a bit further as well. So there's data from The Economist. It's got a very nice interactive graph that shows what's happened to property prices in different countries across different periods of time. So if you go through this and you index it to Q1 2009, so after the last crash, looking at the last 11, 12 years or so, That's really interesting as well, because it shows that house prices in the UK, in real terms, are 25% higher than they were back in 2009. And at first, that sounds like a lot, but if you work out what that is per year, actually, it's not all that much. And again, it doesn't put the UK towards the top of the list. The US has grown by more, Portugal has grown by more, Australia has grown by more, Germany's grown by more, Switzerland, Iceland, Norway, Sweden, Canada, Israel, all have put on more growth than the UK since 2009. So, Rob, lots of the countries that I mentioned just then also crop up in the list of those that have grown over the last year. So the pattern seems to be round about the same. Lots of growth all over the place, UK in the middle of the pack. But that same pattern has really intensified over the last year as prices have rocketed almost across the board.
Yeah, absolutely. And if you bring that time frame in slightly shorter to the last 5 years, the Global Property Guide ranks the UK at 44, out of 68. So it's been below average across the globe over the last 5 years. So I think what it does, Rob, is it puts things into perspective for the UK property market. Now, just because other countries are blasting away and doing bigger numbers doesn't mean the UK is automatically going to follow. But the UK hasn't done anything outlandish compared when you look at a global scale. When you look across the board, the UK's numbers over the last 5 years are below average. Over the last 12 months, a bit above average, but they're not at the extremes, and they're far from the extremes, actually. So having one biggish year of growth doesn't mean that's it. Don't want to spoil the predictions episodes for January, but a spoiler alert, this is going to continue. And we'll talk more about this in our predictions in January when we look at the market and what we expect to come. But this isn't a one-off year. Of course, there might be some global event that stops things in its tracks, and we've got used to that happening over the last few years. But I really hope this is useful to everyone listening, because when you look at a global level, it just feels a bit more normal-ish. And I'm not saying 10% growth is normal, but it's not outrageous. I think it's important though, Rob, and I'm sure a lot of people will be asking this in their heads right now, is why? Why are so many countries seeing double-digit growth? Why is in general, the worldwide economy doing so well? And in general, property prices across the globe doing so well? Of course, there are some exceptions, and we'll mention those near the end, just for your own interest. But let's get into the reasons why. And there are probably a lot of reasons, and per region and per country, there'll be certain things at play like inflation and so on. But most of it, Rob, comes back to one thing.
That's right. To put it in the most basic possible terms, it comes back to money printing. What we've seen over the last year, 18 months or so, has been an extraordinary amount of new money being created in the UK, in the US, and in many other countries as well. And that money finds its way into asset prices. I'm not going to go off on a big one on this because we've done this many times in the past, and I'm sure we'll do it in the future as well. But go and look at the money supply in the UK, go and look at it in the US. You'll see over the last year, the chart suddenly jumped upwards by a dramatic amount. Go and overlay a chart of property prices and you'll see exactly the same thing. And it's not just property that the money finds its way into. There's a reason that the US stock market has been on an absolute tear for the last 18 months as well. And every time people say it can't possibly go any higher, this doesn't make any sense anymore, it does go higher. And it goes higher because it's not driven by what it used to be driven by anymore. It's driven by this supply of new money. And it also tells you, when you put it into a global context, what's not causing house prices to go up in the UK. So house prices have not gone up by as much as they have because of the stamp duty holiday. They haven't gone up by that much because we're not building enough. Maybe we're not building enough, but clearly that's a reason, but not the primary reason. That, for me, Rob, is what makes this exercise so interesting, because it forces you to go, okay, well, property prices are going up, not everywhere, but in huge parts of the world. That means we need to be looking for different drivers of this. And the one that stands out an absolute mile is money printing.
Yeah. QE, money printing, although money isn't physically printed, but money creation, it's absolutely the main driver. There are other things at play, and there will be things happening at a country-by-country basis that will also impact property markets. Certain local policies, for example, or instability in a particular area or region. But overall, the massive driver, the dominant driver by far is QE. Now, I think it's a word of warning here at this point, and possibly we should have mentioned this earlier, but we are not telling you about all these places across the globe to get you excited to run off to go and invest in some far-flung destination. No, far from it. Investing overseas can come with a whole bunch of risks, and we talked about that on the podcast earlier this year. So just because Puerto Rico has gone up 15% this year doesn't mean you should buy a condominium there anytime soon. Wherever you invest, whether it's the UK or overseas, you should really, really know what you're doing and do a ton of research. But you have some baked-in knowledge by beginning in the UK. You understand what happens. Like, you may not be an expert in property, but you've grown up around the UK property market. You know it. I mean, if you're born in this country anyway, it feels natural to you. You haven't grown up in these other countries, the majority of people listening anyway. You don't know the nuances, the key points. You don't understand their legal system. You don't understand their land registry process. All these things that need to be taken into consideration. Now, this is not me saying never invest overseas, but what it is me saying is never invest overseas lightly. I think what we will see in the coming years is overseas property promoted more and more. We talked about this and what to expect in the property boom episode. And because of that, you need to make sure you're not seduced by the pictures of properties in the sun, because it's easily done. I've been there myself. Nearly bought a villa in the last boom of 07, 08 at the absolute wrong time. Got very lucky that I was able to get out of that. But you will see more of that in the coming years. But what this episode absolutely is about is helping you understand the UK a little bit more. And if you understand what's happening across the world, it makes it a lot easier to understand what's happening in the UK. And you can see that it's not a one-off event. It's not an anomaly. And it really puts things into perspective. And then when you hear us talk in January about what's to come, you may not think we're so nuts. So it's a good lead-up episode to that. And if you're curious, across the table of 68 countries, there were only 9 that went into negative territory. 4 of those were less than 3% negative. And your biggest fallers by far were Vietnam at 14% and Philippines at 17%. So spare a thought for the people exposed to those markets. Not so fun. But on the whole, the vast majority of countries across the globe have seen growth this year. And a huge percentage of those have seen double-digit growth as well. So hopefully you've found that really useful and really interesting. I know we have. And this is something we can come back to next year again to see what's happening, because I think it really does help and inform us. And like we said, put things into perspective of what's happening in the UK property market.
Nearly the end of the show, but before we do wrap things up, there's time, as always, for Hub Extra. It's that part of the show where we give you something a little bit extra, an extra tool, resource, thought, something to make your week that little bit better, and we back it up with a Hub Extra email that hits the inboxes of Property Hub members every Friday morning. And if you're not a Property Hub member, go sort that out right now at propertyhub.net. It's completely free, so why not? This week we've got quite a fitting resource, which is wise.com, which you may know better as TransferWise, because that's what it was called until quite recently. And if you are making any transactions abroad, whether it's buying a property or earning in another currency or just getting some money to go on holiday with, don't use your bank, because you'll get a terrible, terrible exchange rate and it'll be a huge pain. Use Wise instead and you get really good exchange rates, and the whole process is really easy from the app. You can also, which is really cool, get a physical debit card, which allows you to withdraw money from your account in foreign currencies when you're overseas, which again is far more cost effective than using whatever exchange rate your bank would normally give you. So travel has not been a large part of most people's lives over the last couple of years, but as we get back to it, Wise is a tool well worth knowing about.
It certainly is. And I think it's worth pointing out, there's no affiliate association here. We're not getting paid by Wise. We both just use it and we're super fans of the product, and we wanted you to benefit from it as well. So it's all done with the best intentions. I was a bit late to the party and I've only started using it recently. I know Rob's been using it for a long time, but I've been so impressed. So do check it out, as hopefully we'll all be traveling a lot more in 2022.
Well, that's us done for another week. Hope you've enjoyed this little round the world in 20 odd minutes and hope you've learned a lot from it. We'll be back to do it all again next week, so please make sure you join us then. We'll see you soon. Bye-bye.
Bye-bye.